Hey everyone, welcome back to the channel. If you're new here, I'm your daily guide to the US stock market, breaking down the most important moves, data, and trends so you can stay informed and ahead. Today is June 29th, 2025, and we're seeing a mixed day in the market. SPY, QQQ, and DIA are seeing different tones as investors digest fresh economic data and Fed commentary. In this full breakdown, we'll explore what key drivers are at play, which sectors are leading or lagging, and how you can position your portfolio. Whether you invest for the long run or trade the short term, this update will help you make informed decisions. Let's dig into today's US market summary. Market snapshot. SPDR S&P 500 ETF Trust SPY is trading at $618.30, down 120 or 0.19%. The intraday range is $617 to $628, with volume near 78 million shares. One site turned finance zero. Invesco QQQ Trust stands at $552.70, up $1 or plus 0.20%, within a 554 trading band on around 49 million shares, site turned finance zero. SPDR Dow Jones Industrial Average ETF sits at $441.60, down 85 or 0.19%, trading between 440.10, 402.25, with volume near 3.2 million shares, site turned finance zero. What the numbers suggest: SPY's slight pullback suggests hesitation in broad market confidence following economic data. Technology resilience, QQQ continues to edge higher, showing strength and growth. Industrials under pressure. DIA softens as macro concerns weigh on cyclical sectors. Volume moderate, not panic pattern, indicates a calm but cautious market tone. Key drivers today: 1. Economic data, retail sales, and PCE preview. Investors are parsing the September to May retail sales report, showing a muted 0.1% growth, slower than expected, signaling consumer resistance, site turn search. Additionally, markets await the core PCE due tomorrow. Fedflation benchmark. Expected to remain steady, but any upside surprise could shift expectations on Fed easing timing. 2. Fed lingering tightness tone. Fed speakers reaffirm that rate cuts remain data dependent. San Francisco Fed's daily and Cleveland Fed's Mester caution that premature easing could overheat inflation, cite turn search 1. Fed officials emphasized patience, keeping yields anchored and sending mixed signals to equities. 3. Geopolitical and trade developments. Trade headlines are relatively calm today, no new tariffs, but lingering uncertainty in Asia-Pacific supply chains is moderating industrial strength, say turn search. That's weighing on cyclical names within DIA. 4. Earnings on deck. Market sentiment turns toward earnings season, with big tech reporting next week and financials following. Caution ahead of results slows bullish enthusiasm. QQQ holding steady amid cautious investor rotation. Sector breakdown: technology, and growth. With QQQ inching higher, tech remains the defensive anchor. Artificial intelligence, cloud, and software stocks like IVV are seeing steady inflows. Investors favor stability over cyclical shifts. Cash, industrials, and cyclicals. DIA's slight pullback highlights concern among industrials tied to consumer spending dips and supply chain hesitation. Raw material stocks are tracking sideways as trade expectations shift. Financials, banks. Financial stocks show mild weakness. Rate-sensitive lending conditions and mixed loan growth data ahead of earnings are limiting enthusiasm. Energy and materials. Energy stocks hold flat as oil trades steady. Minor upside in materials blends neutral dimensionals with drumbeat of slower retail spending. Consumer discretionary stocks are under pressure. Slowing retail sales and concerns over consumer resilience in a high-rate environment weigh on sentiment. Macro summary and Fed outlook. Inflation, core PCE expected to remain steady, but anything above trend could delay cuts. Retail spending flag, weak sales suggest consumer pressure and possible growth slowdown. Fed stance, lingering caution from regional Fed officials indicates cuts aren't imminent. Yields, Treasury yields holding steady around 4.20% keep cyclicals in check. Opportunities and risks. Opportunities, tech growth. If Fed keeps inflation under control, tech remains a top play. Quality cyclicals, Healthcare and consumer staples may benefit as safe havens. Selective financial exposure. If PCE and retail soften, bond proxies and finance may offer value. Risks. Inflation upside. Any PCE surprise could instantly tighten market expectations. Consumer slowdown. Ongoing retail weakness could dampen cyclical rebounds. Trade disruptions. Sudden trade shifts or supply chain issues could trigger rotation out of cyclicals. Hatch Strategy Guide. Long-term allocation. 12 to 18 months. Tech and innovation. 45% QQQ AI-led exposure. Quality defensive sectors, 20% in consumer staples, utilities, financial select cyclicals, 15% conditional on stronger consumer data, bonds and cash, 20 to stay flexible around inflation surprises. How tactical moves, buy tech dips, especially QQQ near 550 area, monitor DIA and IWM entry points. Cyclicals may rebound post PCE. Hedge with bond proxies. Use TLT or BSV for insurance. Add protection around PCE release. Use low-cost put spreads. What's coming? Tomorrow, core PCE print, important inflation update. Next week, earnings from FANG and major banks, a turning point. July outlook, continued macro balance with cautious rotation between growth, value, and defensives. Final take, markets are uneasy but not panicked. Tech keeps carrying the load, while weakness in consumer and industrial names reminds us of the fragility beneath. The next few days are pivotal. Watch PCE and earnings for signs of the next move. Drop a comment with the tickers or sectors you'd like me to dig into next. And if this update helped, please like, subscribe, and hit the notification bell to stay updated on each U.S. market recap. Thanks for tuning in. I'll see you tomorrow.